Today I'm going to talk with you for just a few minutes about accrued versus deferred, accruals versus deferrals. It's all about the timing, and timing is so crucial in accounting because recording things at the proper time is what gives us a true, accurate picture of our financial position. How are we performing? Are we earning a profit? Do we have a loss, etc.? Okay, so let me share my screen with you. Okay, so we have now talked about our basic adjusting entries, and adjusting entries fall into three categories, our end of period adjustments. They are either accruals, deferrals, or they are an asset adjustment. Okay, asset adjustments. We won't talk about some of these until later, but we have already talked about depreciation. But for the sake of this video, we're focusing on accruals versus deferrals. Accrued revenue is revenue that we have earned but have not yet invoiced or billed our customers. So I have done the work. I'm supposed to prepare your taxes for the year. I have done that, but you have not paid me, or maybe I haven't even sent you a bill. So that revenue is accruing or building up. Okay. Accrued expenses are expenses that have been incurred, they have happened, but they have not yet been billed. So I have been incurring an expense. The expense has been happening, but the supplier hasn't sent me a bill for it. So accruals is when we are letting something build up or accumulate. Deferrals. Deferrals are when we are putting something off, okay? Deferred revenue or deferred income, the perfect example of that would be when we have unearned revenue. When we have unearned revenue, remember, that means somebody's already paid us for doing the work, but we haven't done the work yet. We don't record that as revenue, do we? What do we record that as? That's right. Unearned revenue is recorded as a liability. So even though I've already received the cash, I am deferring or putting off recording the revenue. I'm putting it off until I earn it. We also have deferred expenses. So I'm putting off recording the expense. Perfect example, anything prepaid. So when I prepay my rent for multiple months, or I prepay for a whole year's worth of insurance, I've already spent the money. I already technically, quote, have the insurance coverage, but I'm not going to record that as an expense until I actually use it. So every month I would use 1 month's worth of my prepaid rent or 1 month's worth of my prepaid insurance. So we've already talked about unearned and prepaid, but now we're just kind of giving them an additional context. Is it accrued or is it deferred? Okay, it's all about the timing. So since we say it's all about the timing, let's break it down. Our two accruals. Notice that an accrual can be revenue or expense, and a deferred can be revenue or expense. So accrued revenue, the revenue is recognized now, even though I won't get paid till later. So anytime I do the work for my customers and I let them pay me later, that's an accrual because we record revenue when it is earned, even if I'm not going to get paid until later. Accrued expense. The expense is recognized now, even though I'm not going to pay for it until later. So the perfect example is anytime you buy something on a credit card. If you buy it today, it's an expense of today, even though I won't pay it till next month when my bill's due. So accruals, the recognition is now, cash changes hands later. Deferrals are the exact opposite. With deferrals, the cash part is now, the recognition part is later. So deferred revenue, we said the perfect example was unearned revenue. The customer has paid me, so the cash part is now, but I'm not going to recognize it as revenue until later when I actually earn it. Deferred expense, we said the perfect example was anything prepaid. I've already spent the money. I paid the insurance company today for a whole year's worth of insurance. So the cash part is now, but the recognition part won't be until later when I actually use up that insurance. So every month I would recognize 1/12 and then another 12 and then another 12. So it's all about the timing. Accruals, cash is later. Deferrals, cash is now. Okay. This is just another example of same information. Deferred revenue, we receive cash now. We recognize the revenue later. Because remember, defer means to put it off. Accrued revenues, we recognize the revenue now, even though we won't get paid till later. So on the previous slide, I had it grouped by accruals and deferrals. Now we're looking at revenue, whether it's deferred revenue or accrued revenue. Remember, deferred means cash now, recognize later. Accrued means recognize now, cash later. Same stuff we've been saying, I've just got it grouped a little bit differently. I like to give y'all options. And so then I've got our expenses grouped together. Deferred expenses versus accrued expenses. So once again, remember, anytime it's deferred means cash now, recognition later. Anytime it is accrued, it means recognize now, cash later. Okay. This can be confusing for some people. And that's why, even though your book kind of talks about it more at the beginning, I like to go ahead and make sure you understand the adjusting entries and then kind of add these labels to them. It's not changing anything we learned about the entries. We're just now, we can think about it and know, are they because of a deferral, or are these adjusting entries caused because of an accrual? So just remember, it is all about the timing. Okay, so just kind of let that sink in. Look back at those slides. Remember, timing, timing, timing. Whether we're talking about accruals or deferrals or the matching concept, notice some of the most important stuff we talk about in our basic accounting cycle is making sure we get stuff recorded at the appropriate time. Because once again, one of the major outputs of our accounting system is our financial statements. And if we haven't recorded stuff during the appropriate time frame, then our accounting statements aren't really very accurate. And that's a bad thing. Okay. Thanks for watching. Let me know if you have any questions.